Yes, sir, but the voice is very low.
Sir, we can't hear you.
No, sir, you are not audible.
Can you hear me now?
Yes, sir.
Yeah. Okay. Okay, I'll be taking the taxation class. Yesterday we discussed problems on depreciation and in fact two problems on depreciation, and I just introduced you to the concept of additional depreciation. I introduced you to the concept of additional depreciation. That's it. Okay. We did not go thereafter. So today we'll try to again revise whatever we discuss as far as additional depreciation is concerned, and then we'll move ahead with other forms of depreciation. Okay. Now, quickly we'll try to understand. Depreciation can be claimed under four heads. One is normal depreciation, second is additional depreciation, third is unabsorbed depreciation, and fourth would be the terminal depreciation. So there are four different types of depreciations that we have to understand. Right now, what we have discussed so far, we have discussed normal depreciation, for which we solved a couple of problems in the last class. Next, today we are going to discuss additional depreciation. We'll discuss a problem on that, and then we'll try to understand what do you mean by unabsorbed depreciation and terminal depreciation. Clear? So let us start our discussion with additional depreciation. First and foremost condition to understand, if you want to claim additional depreciation. Now please understand, when we say that you are claiming additional depreciation, is basically first you claim normal depreciation. Whatever is your normal depreciation, you can claim that, plus you can also claim additional depreciation. You can also claim additional depreciation. The condition is only one. Okay. To claim additional depreciation, there is condition, and the condition is, first condition, you need to be a manufacturer. You need to be a manufacturer. This section is not applicable for traders, for people who are into commerce, but it is applicable only if you are in the business of manufacturing. Point number one. Second, you need to purchase a new plant or a machinery, and that should be acquired after 31st March 2005. If you have acquired any machinery or plant which is brand new, and that too if you have acquired it after 2005, only then you will be eligible to claim this additional depreciation. Now when I say new, it means it has to be brand new. It has to be brand new plant and machinery. No old second hand leased machinery or plant will be allowed. It has to be a brand new plant. Only then you can claim additional depreciation. The rate of additional depreciation, the rate of additional depreciation is 20%. If you use the asset for more than 180 days, you can claim full 20% depreciation. If you use the asset for less than 180 days, you are eligible to claim only 50% of the additional depreciation. 50% of additional depreciation is 10%. So this is what we need to understand as far as additional depreciation. There is no other theory there. The only condition is that you need to be a manufacturer, you need to acquire brand new plant and asset, plant and machinery, and this plant and machinery has to be acquired after 31st March 2005. If these two conditions are satisfied, then you are eligible for claiming additional depreciation. The only exclusion is this condition is not applicable for ships and aircrafts. It is not for used plant and machinery. It is not for shifting of plant and machinery from your office or residence to the factory. It has to be, again I use the word, it has to be a brand new machinery. Only if it is a brand new machinery or plant, only then this condition gets applicable. Clear? Any doubts in this?
Excuse me, sir. So we're not able to see the screen.
Surprising. Shall we share it? Just a minute, I'll share it once again. Can you see it now?
Yes, sir.
So this is what you need to understand as far as additional depreciation is concerned. Okay. Any doubts in understanding now? You have not seen the screen, that's fine, but have you understood the logic here? Okay, I'll give you some time. I'll give you a minute or so. Please go through these points. Okay, and then we'll start our further discussion. Remember these words. Only for manufacturing, asset has to be acquired after 2005, that is 31st March 2005. It has to be a brand new asset. Only then these conditions are applicable. This condition is not applicable for ships and aircrafts, not applicable for used plant and machinery, whether it is from India or abroad, not applicable for any plant and machinery which is going to be shifted from your residence or office to the factory. Okay. If you use the asset for more than 180 days, you are eligible for 20% extra depreciation. Okay. Condition is if more than 180 days. If you use the asset for less than 180 days, then 10%. These are the two conditions that you have to take into consideration. Apart from that, there is nothing special as far as additional depreciation is concerned. Clear?
Yes, sir.
Yeah, we have a problem here. Just read this particular problem and we will solve this particular problem. Just go through this. Gone through it? Now, what does it say? There is a manufacturer. So our problem is solved that he is a manufacturer, no problem. He's into computer business in 1995. During the previous year, he had the following assets. So these are the depreciation rates. Remember, these are normal depreciation rates. Okay, whatever you can see here are all normal depreciation rates. Okay, This is the written down value as on 1st April 2017. Okay, and what is our assessment here and what is our previous year here? Can anyone tell me what is our previous year and assessment here?
So 1994 to 1995.
Please come again.
So manufacturing computer hardware since 1995 it is. So the
But what is our
previous year
previous
maybe.
year, Mronali? What is the previous year?
So 1994 to 1995.
No, 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 no. Here it is clearly given to you, right?
Okay, sir.
Now tell me what is your previous year? Okay, tell me what is assessment. What is your previous year first? Your previous year in this particular problem is going to be 2017 to 2018, and your assessment year is going to be 2018 and 2019. This is going to be your assessment year. That means whatever income that you earn in this particular year, you are going to pay the tax in the next year. You are going to pay the tax in the next year, right? Now, as on 1st April 2017, these are the assets that you have. Now remember, this is not 18,00. The figure, the values are in thousands. Okay, so this is the value of assets that we have. This is the extra addition of plants that you did in that particular block during the previous year, and these are the plants that you sold in the previous year, right? And some additional information has been given. Okay, further you are asked to find out depreciation, additional depreciation, and capital gain. If at all there is some capital gain, that is what we have to find out. So these are the conditions, or these are the questions that have been asked to us, right? Now step by step we will go and try to find out the answers for all of this. Clear? Pay attention. Remember, we have one set of data. We have one set of data, that is this one. This is the written down value. So we'll first start our problem, or we'll start our discussion with written down value, and then we'll go further. So these are the written down values. So we'll start with this one, okay, and then we'll go to additional depreciation. Pay attention as to how I'm starting the problem. Okay. Now don't look at the problem in, that is too difficult to understand. It's quite easy to understand, but it requires a certain understanding. It requires certain logic. First step. First step is we are going to calculate whether that particular computer manufacturer, okay, whether he is eligible for additional depreciation. We'll check whether that particular person is eligible for additional depreciation. Okay. Now, how do we check whether he is eligible for additional depreciation? Go back to the problem and see, is he a manufacturer? Yes, he is a manufacturer. Has he added new plants? Has he purchased new plants? He has purchased new plants. Okay, 1, 2, and 3. He has purchased new plants. Has he purchased these plants after 2005? After 2005? Yes, he has purchased all these plants in May 2017 itself. Clear? And he has put the plant to use in September 2017, right? However, plant B has been put to use in March 2018. So out of these 3 plants, only this particular plant is used for less than 180 days. Please try to understand this. He has acquired the new plants after 2005. Okay. He's a manufacturer. He has acquired new plants after 2005. He has all these plants that have been acquired are in the previous year. Okay. Next, immediately after purchasing, plant A and plant C have been put to use. Okay, but plant B was used for less than 180 days. This is the basic condition that we have to understand as far as additional depreciation is concerned. So we'll look only for additional depreciation first. Okay. Now, first of all, just look at this. What is the rate for additional depreciation? It is 20%. Okay. Here also it is 20%. Can you tell me why have I written 10% here? Ideally, I should have written here 20%. Why have I mentioned here only 10%? Can anyone point out, please?
So it's less than 180 days.
It is less than 180 days. Whatever is the depreciation for additional depreciation rate, that is 20%, 50% of that has to be considered. So I consider only 10%. Okay. Next, whether additional depreciation is applicable? Yes. Reason is he is a manufacturer. The machinery is brand new machinery or plant, and it is acquired after 2005. So he is eligible for additional depreciation. Clear? Now, if he is eligible for additional depreciation, what are the assets that he purchased? What are the assets that he has purchased? So he purchased plant A for 57 lakhs. He purchased plant B for 4 lakhs. Okay, and he has purchased plant C for 17 lakhs. Clear? Now, accordingly, what is the additional depreciation that I can claim? It is going to be 57 lakhs into 20%. So just do 57 lakhs into 20%. See what you get. Just try it out. Is somebody calculating what is 57 lakhs into 20%?
11,40,000.
Shaila, are you getting the answer here? 11 lakh
Yes, sir.
40,000. Are you getting it?
Yes, sir.
Okay. Rashmi, can you calculate depreciation for 4 lakhs?
Yes, sir.
Yeah.
So 10% on 10% on 4 lakhs, right, sir?
It is 10%. Please don't get confused. Others, it is not 20%. It is 10%. So 10% of 4 lakhs is how much? 40,000.
50,000.
And similarly, 20% of 17 lakhs is 3 lakh 40,000. So I have got the value for additional depreciation. Clear? So this is, I have completed step number 1. Now I go to step number 2. Step number 2 is nothing but it is the concept of normal depreciation, right? It is the concept of normal depreciation, right? So if I'm using the concept of normal depreciation, I have to mention what are the depreciation rates. So if you look in the problem, my depreciation rates are 15%, 30%, and 60%. And this is the written down value of the assets that I have. This is the value of the written down assets that I have. So the same value I'm going to mention here. Clear? So I have plant A, plant B, and plant C at 15%, 30%, and 40%, which is given to me in the problem. Accordingly, written down value, whatever is there, just look at the value. It is 18 lakhs, 25 lakhs, and 5 lakhs. The same values I have mentioned here. So this is my written down value of the assets that I have. Clear? Now, in the same year, in this particular same previous year, I have purchased some assets. Where do you get this data from? This is the same data here. You have purchased some assets, right? So you have purchased some assets. So write down those values once again here. Because it is additional, so you have to write it 2 times. So once to claim additional depreciation, once to claim normal depreciation. So write the values once again here. Now, this is what you already have. The blue color figures are the ones that you already have these assets. The green color figures are the one that you have purchased those particular assets, and red color ones are the ones that you have sold the assets. I'll go back to the problem. You have sold the assets here. Can you see here? You have sold these assets. So whatever assets you have sold, I have just mentioned it here. So this is the sale value of the assets that I have. So after I do that, this is what I have, this is what I acquired, and this is what I sold. So when you take the net of it, How much do I get? I get 74 lakhs 92,000 under for plant A at 15% depreciation. For plant B, I get 30,000, and for plant C I don't get anything. Can you please tell me why will I not get anything here? Why will I not get anything here? Can you please tell me?
Sir,
The
it's
whole
sold.
asset is sold out.
Yes, Gautami? Yeah, Gautami, repeat.
So the whole plant C is sold out.
See, if you add these two, 17 lakhs plus 5 lakhs is how much? 22 lakhs, right? So you
Yes,
had
sir.
assets worth 22 lakhs in this particular block of 40%, that is plant C. You sold that entire plant for 42 lakhs. Now, when there is no asset under under the block for under this particular block of 40%, naturally you will not have any written down value. So your written down value will be nil. Clear? So when there is nil value, naturally the depreciation value will also be 0. Now let's try to calculate the depreciation. Now what will you calculate this depreciation on? Whatever value that you have got here, you have to multiply this value with 15%. Multiply this value with 15%, you will get the depreciation. Mrinali, please calculate this.
Sir, the amount is 8 lakh, right?
Amount is
So for plant, sold out plant is 8 lakh. It's 8,000 return.
it's 8,000.
Okay. So it's 11 lakh 23,800.
How much?
11 lakh 23,800.
11 lakh 23,800. So this is the depreciation
Yes, sir.
that you can claim under plant A. Okay. Same, here is the depreciation that you can claim for plant B. And of course, there is no depreciation here because the block ceases to exist. The block is not into existence. So there is no depreciation as far as plant C is concerned. So this is your, please understand, this is your normal depreciation. This is your normal depreciation. So you have calculated your normal depreciation plus the additional depreciation that you just calculated. You have to add it back here. Whatever additional depreciation that I have calculated, you have to add it here. So this is additional value. So this is additional benefit that you claim. So just copy these values here. Then you take the total. Okay, then you take the total. And this is going to be your new written down value. How did I get this? You have to subtract 74 lakhs 92,000 from these two. Add these two and subtract it from 74 lakh 92,000. You will get this answer. That is your new written down value. Just calculate it, Mrinali. Anybody calculating this? Please calculate it fast.
52,28,200.
Getting it?
Yes, sir. Yes, sir.
So there will be no written down value here. Why? Because you have assets worth 30,000 and you are claiming depreciation worth 44,500 rupees. If you add these two, it becomes 44,500. You have assets worth 30,000. You are claiming depreciation worth 44,500, right? Actually, this you cannot claim depreciation more than the value of the asset. So naturally, the written down value will be 0. In other words, this block will also cease to exist in some days. Okay, so this is the answer that you get. Now, the third step is they have asked us to calculate the capital gain. Now, you have sold assets worth 8,000 here, which I have written it as it is. Next, you have sold assets worth 28,70,000. That value also has been written. So whatever you have sold, I have written down the values here. Okay. Now, look at this. Whether capital gain is taxable, the block does not cease to exist. Sale proceeds do not exceed the opening balance. Now, in other words, if you look at this, your sale value is less than the written down value. When you're selling the assets, its value is lesser than the written down value of the assets. Naturally, there will be no capital gain for you. So there is no capital gain here. There is no capital gain here because the assets are still there. But there is going to be a capital gain here. Why? Because this particular block is completely wiped out. We call it by the word it ceases to exist. That means it is no longer existence. And because there is no longer existence, we sold the assets of plant C for 42 lakhs. Okay, we sold the assets for 42 lakhs. The value of the assets that we had is the summation of these two values, that is 22 lakhs. That is our cost of acquisition is 22 lakhs. Okay, so balance difference between these two amounts, that is my capital gain. The difference between these two is my capital gain. So I have a short-term capital gain of 20 lakhs. How many of you are not able to understand this part? Please tell me.
So repeat, please.
Remember, the problem has divided into 3 and this problem had come for your as 10 marks. First step, calculate additional depreciation. Second, calculate normal depreciation. Third, try to find out whether there is a capital gain. For plant A and plant B, there is no capital gain. But for plant C, there is a capital gain because the plant ceases to exist. There is nothing called as plant C now. Once you have sold that plant C, there is nothing called as plant C. Okay. Why there is nothing called as plant C? Because when you sold that plant, you got something more than what is the cost of that asset. And when you have got something more than what is the cost of the asset, naturally you have a capital gain. And whenever you have a capital gain, you are liable to pay tax on the capital gain. So the total capital gain that you have is 20 lakh rupees. Any doubts here?
No, sir.
Okay. Next we come to unabsorbed depreciation. Please read through this. I'll explain to you what do you mean by unabsorbed depreciation. You have to understand the theory here. Okay, understanding the theory is important here. If you want, I will take a problem also, but understand the theory first. Okay. Okay, what does this particular section say? This says that suppose you have a depreciation amount which is greater than the income that you have. In such case, entire depreciation is not being absorbed. So if you cannot absorb the depreciation from one aspect, look for the second aspect where you can absorb the depreciation. The only condition is that that income should not be from salaries. It can be from income from house property, it can be income from capital gains, it can be income from other sources, it can be income from business and profession of some other business also that you own, but it cannot be income from salaries. Okay, so in all these cases, if you are still not able to absorb the depreciation, then you can carry forward the depreciation to the next year. That is what it says. Are you able to understand? What I will do is I will take up a problem on unabsorbed depreciation, because this is a very vague concept to understand when I look at only the theory part of it. But when we come to the problem part of it, I will explain to you how unabsorbed depreciation also works. Okay. Right now I don't have the problem, but in the days to come, I will get a problem and we will solve this particular problem as far as unabsorbed depreciation is concerned. I think that we have the problem here. Yeah, the problem is there. Only thing is we have to solve this. Clear? So, by the way, have you? It is not easy to understand this particular theory. I'll take up a problem, and only through the problem we will be able to understand it. Should I take up a problem, or should I go to the next part? How is it? Generally, this is not asked
Problem,
for
sir.
exam. This is not asked in the exam. That's the reason I'm not focusing more. Only normal and additional depreciation is more focused on. So that's the reason I have mentioned the problem, but I have not solved it. If you want me to solve it, I can still solve it here itself. What do you want me to do? What do you want me to do?
So we'll not solve that problem.
Will not solve it? Okay, fine.
No, sir.
Fine. Okay. Last one is terminal depreciation. Okay, terminal depreciation is again a concept which is quite vague to understand. Please go through this. Or best thing is, I'll tell you, will skip it. It is not there for your syllabus. I just don't want to confuse you. Terminal depreciation is not there for your syllabus. Only these three types of depreciations are there for your syllabus: normal, unabsorbed, and additional depreciation. So I'll skip terminal depreciation because it's quite complicated to understand. There are a lot of conditions that we have to understand. What is step number one? What is step number two? If value is greater than this, then what to do? If value is less than that, okay. Clear? So we'll just try to see this particular theory later on. Right now, we will go to the next part. Is that okay? I'll explain to you. Don't worry. Whatever I am saying that it is not there for you right now, or I'll explain it later, I'll definitely explain it to you, because we have ample time now. Your term has been extended, so I can even solve a problem in case need be. But right now, what has been planned, I will just try to finish it up. Is that okay?
Yes, sir.
Yeah. Before that, for namesake, just read through all these points. Just go through these 2 points, and then we'll go to the next part. Okay. Now, most important thing that you need to understand is terminal depreciation is applicable for power generation plants. Okay. Why power generation plants? Because there is a lot of wear and tear that goes on as far as power generation plant is concerned. That's the reason the concept of terminal depreciation is applicable for power generation plants. One, this particular power generation plant in the previous year, it could be sold, it can be discarded because it is too old, it can be destroyed, or it can be damaged. Anything can happen in to that particular power plant. And if this any of these things have happened in the previous year, then terminal depreciation can be taken into consideration. Now, how do we compute this concept of terminal depreciation? Suppose I have a plant, a power plant, which I am going to discard it because it is too old. Okay, it does not give me the efficiency. I am going to discard that particular plant. Let us say in September 2020, I am going to discard this particular plant. My previous year is 1/4/2020 to 31 March 2021. This is my previous year. I'm just giving an example. This is my previous year. Okay. And in September 2020, I'm going to discard my power generation plant. Right? Now, in this case, am I eligible to claim terminal depreciation? Yes, I am eligible. I am able to claim terminal depreciation because, first of all, I am into the business of power generations and I own a power generation plant. Point number one. Second, I am going to discard this particular plant because it is too old. I cannot maintain this particular plant. I am going to discard this particular plant in September 2020. Right? So if I want to claim terminal depreciation, what I need to do is I need to find out what is the WDV of this particular plant as on this particular date. Right? I'm going to find out the WDV of this particular plant as on this particular date. Suppose I find out the value of this particular plant to be 1 lakh. I'm just giving an example. I find out the value of this particular plant to be 1 lakh as on 1st April 2020. In September, I discard it. Right? I discard it. So if I discard it, naturally, I'm going to sell it as scrap. Right? I'm going to sell it as a scrap. And when I sell it as a scrap, I will earn around 30,000 rupees from this plant. I'm just giving an example. I earn 30,000 rupees from this particular scrap. Now, how do I calculate terminal depreciation? First, find out the written down value of the asset on the first day of the previous year in which the asset is sold or discarded. So as on this particular day, what is the value of my asset? It is 1 lakh. So I found it out. Find out the sale consideration. I have sold this plant for 30,000. Okay. Now, if the calculated amount under step 2 is greater than step 1, is 30,000 greater than 1 lakh? Is my first question. Is 30,000 greater than 1 lakh? If the answer is no, then I have to go to next point. If step number 2, if 30,000 is less than step number 1, then terminal amount shall be deductible or written off as capital loss, because I have my written down value of the machinery is 1 lakh and I have sold the plant for 30,000, which means I have incurred a loss, right? I have incurred a loss of 70,000. So this loss will be called as capital loss. On the other hand, I'm just giving another example. If the written down value of my asset is 1 lakh rupees and I sold the plant for say 1,30,000. In this particular case, 1,30,000 is greater than 1 lakh. So I will have a capital gain of 30,000 rupees. I will have a capital gain of 30,000 rupees, which is going to be subjected to tax. Clear? And I'm eligible to claim depreciation on, or that is what we call as terminal depreciation on this particular amount. Clear? So this is only for your understanding purpose when it comes to problem, because there are a lot of things that we have to take into consideration when we come to the problem part of it. But right now, try to understand only the meaning and concept of the word terminal depreciation. Is that okay? Is that okay?
Yes, sir.
I'll just move on to the next part. We have the concept called as deemed profits. Okay. Now, the word deemed profits means they don't look like profits, but they are still profits. That is the reason we call it as deemed profits. I repeat my statement. Deemed profits under section 41. Again, from your exam point of view, this is a 6 marks theory question. Deemed profits means these conditions, these are, they look like, they don't look like profits, but they are actually profits. And what are those is what we have to understand. So I'll explain to you what are those. There are many conditions to get to understand this, but first condition is just go through this particular first point. Please go through this. Have you gone through this? Have you gone through this?
Yes, sir.
Yes, sir.
Have you have you understood something? Have you understood something? Okay,
So like conditions, third point.
Okay. Remission of liability or recoupment of loss. I'll explain to you. Suppose you are a trader. Suppose you are a trader and you have sold some goods on credit. You have sold some goods on credit, okay, to me. You have sold the goods to me, okay, on a condition that I will pay you after 3 months, right? With this condition, you sold me the goods on credit. So I took 3 months credit, and after taking 3 months credit, I did not pay money to you because I don't have money. So you extended another 6 months. You extended another 3 months. So altogether, you have given me 6 months of time to repay my obligation. My condition is so bad that I cannot pay even in 6 months also. I'm not able to make the payment for the goods that I purchased from you for last 6 months also, right? So in that particular case, at some point of time, you came to know that I'm not going to pay your debts. I'm not going to pay your money. So you thought that this account or this particular transaction is soon going to become a bad debt. This account is going to be soon to be termed as bad debt, right? And when you are terming this particular account as a bad debt, what do? You make a provision in your account. You make a provision in your financial statements that you had supplied me goods worth 2 lakh rupees. You had supplied me goods worth 2 lakh rupees, and I have not paid you this 2 lakh rupees for a considerable period of time, that is more than 6 months. And some point of time you feel that this money is not going to come back. So you declare this particular account as a bad debt. And when you declare that particular account as a bad debt, you make a provision for it. You make a provision for bad debt, right? You make a provision for bad debt in your liabilities. Are you able to understand? So you made a provision for that particular account, okay, and the financial year got over. When the next financial year started, my condition improved. I got money and I repaid you back this 2 lakh rupees. I repaid you this 2 lakh rupees in the next financial year. So in the next financial year, you got this 2 lakh rupees, right? And this 2 lakh rupees, you had given a provision as bad debt. You recovered that 2 lakh rupees. In other words, you have got an income. In other words, you have got a profit of 2 lakh rupees. This is called as deemed profits. Are you able to understand the meaning of how do we interpret this particular statement? Deemed profits means you had earned this particular profit, but for some or the other reason, it did not materialize in that particular financial year. Sooner or later in the next financial year, you are able to recover all those losses. And because you are able to recover that particular loss, and you had already made a provision for that, the entire amount that you got back will be called as deemed profits. Are you able to understand? On the other hand, if you had not made a provision, of this particular bad debt in your books of accounts, and after 1 year or 2 years, if I had repaid you this 2 lakh rupees, this amount will not be called as deemed profits. Why? Because you did not make a provision. The first condition is, if you want to write off the bad debt, you have to make a provision for that particular bad debt. And after making a provision for that particular bad debt, only then you can write it off from your books of accounts. Without making a provision for bad debts, you cannot write off that particular account. So here, you supplied me goods, I did not pay you in 6 months, you declared my account as a bad debt, you made a provision, and you have written off that particular account from your books of accounts. But in the next financial year, I repaid you back this 2 lakh rupees, and as a result, you got this entire 2 lakh rupees as profit. Okay, and this particular amount that you have got as profit will be called as deemed profits. That is the whole meaning of this particular slide. Understood? Have you understood this?
Yes, sir.
Anyone is facing any doubts in this? So first it says allowance has to be made, okay, in the previous year for loss or expense towards the trading, towards the liability that has been incurred. Okay, the assessee has recovered a part of the expenditure. This extra money that he has recovered will be called as deemed profits. That is the meaning of this particular slide. So this condition is called remission of liability or recoupment of loss. Recoupment means recovering of loss. You thought that this particular 2 lakhs rupees is bad debt, it is gone, but you recovered it, and once you recover it, it will be called as deemed profits, and you are liable to pay tax on that deemed profits. Getting it? So this is the first point as far as deemed profits is concerned. Second one is called balancing charge, and third one is called scientific research. Just go through these two and then we'll stop.
Sir, are you continuing the class because HR students are texting us?
No, I'll not be taking compensation now because I have to go through your fifth unit. I need 1 or 2 days time. I will continue with this tax class for another 10 minutes and then we'll stop it. I'll not be engaging compensation management class now. Okay, next one, we call it as balancing charge. Just go through this and then go through these 2 points also. Balancing charge and assets used for scientific research. Yeah, Rashmi?
Sir, I had a doubt regarding investment management, sir, if you won't mind.
Yeah, no problem. No
Yes, sir. So actually, everyone is confused if we have to submit it individually in the Word format, or we have to like collect it together and we have to submit it in groups, sir.
Okay, I'll just tell you. Rashmi, how many people are there in a group?
So for
Just a minute. Just a minute. I'll clarify that doubt. Many people have it.
yes, sir.
Now, Rashmi, tell me quickly. Okay, I'll explain to you so
Yes,
that
sir.
things become easier for us. A very important module as far as investment management is concerned, right? So please don't miss the classes. And whenever I'm teaching this particular module, whatever companies that you have selected individually, like for example, Rashmi has selected Cadila, Cipla, and other things. These companies, you have to do a fundamental analysis of the same companies. I will tell you how to do this, where to get the data, what to look into the data, how to analyze everything. I will tell you as far as fundamental analysis is concerned, also as far as technical analysis is been concerned. So I'll tell you all this, but these companies are going to be your companies till the end of this semester. So in general, we are going to study in depth of all these companies. Okay, and at the end of unit number 6, or probably at the end of unit number 5, you will understand that among pharma companies, Dr. Reddy's is doing very well. So let us pick that company. In automobile, Mahindra and Mahindra is doing well. In IT sector, Wipro is doing well. So what we are going to do, we are going to pick up the best of the best companies and make them as one portfolio. This is what mutual fund companies do. They select one particular share, they select one particular sector, they try to find out each and every company in that particular sector, they do a very thorough analysis of that particular sector, and whichever is the best company, they pick up from that particular sector. The same thing they do for cement, the same thing they do for steel, the same thing they do for IT, banking, pharma, infrastructure. They do all the same activity for each and every sector, and they pick up the best of the best companies. And once they pick up the best of the best companies, then they club this company into one portfolio and they sell you as a mutual fund. Clear? And your last unit is nothing but mutual fund, valuation of mutual funds. So if you understand, if you go the way I am going to teach you, or if you start using the practical aspect of the way I'm going to teach you, remember at the end of your third semester, if you want to make your career in investment, your project for third semester will be ready, provided you do the way I tell you, and also if you want to do in investments only. If you want to do in any other sector, you are free to do that. But if I tell you the way it has to be done, you will not have any problem as far as your projects are concerned. Clear? So I will stop the class now. Rohin has sent me the data. I will work on this data and I'll quickly forward the output the way I want the output. Okay, so that it is easy. See, I don't require this output. Looking at the data itself, I can come to know the output. But for you, I'm making it very clear. I'm keeping one thing in my mind, that if you do this, it will help you in your projects. In other words, indirectly, you are doing your project itself. Right? So with this intention, I'm asking you to give me the data in the required format. Is that clear? So don't treat this as a punishment. It is for your own benefit, that you should be well versed with covering the data, giving a desired output of the data, and also presenting the data. Clear? So in the next 15-20 minutes or so, I will send you the soft copy. Please have a look at it, and accordingly, everyone has to do it. Is that okay?
Okay, sir.
Yes, sir.
Yes, sir.
Yeah. So I'm going to stop the class here. I will take compensation probably tomorrow, not tomorrow. Day after tomorrow, I'll start with compensation. Okay, even if I have a class tomorrow,
Okay, sir.
I don't think I have a class tomorrow. If I have it, let me try. If not, at least by Saturday, I will start with compensation. And anyways, sir is very fast in compensation. He has completed 4 units. Okay, we have not been able to cover even the 3rd unit in investment and taxation. So we are comparatively very slow. So we'll focus on these 2 units first. Compensation, I can finish it in 1 week also. Don't worry about it. So I don't want to go very fast. Let us give a break for compensation, and I'll take up compensation by Saturday. I will start. Okay. Yeah. So I'll just take the attendance. We had 30 people who had attended now. So please come in the video mode so that I'll take the attendance. Yeah. Thank you. And I'll meet you in the next class. I don't think I have a class today. Investment management is there. That is last class. I will
Yes, sir, in the afternoon we have.
we'll take it. We'll take it investment management. Okay. Thank you.